My name is Jake, welcome to the channel. In today's video, I want to talk about how to improve your financial literacy. Now, there's a ton of different blogs and articles out there and videos on, the best ways to improve your financial literacy. If you go and do a quick Google search, you're going to get a whole bunch of different stuff, right? You're going to get lists of, hey, you need to learn how to budget. You need to learn how to do this and that. In today's video, I really want to focus on the exciting topic of taxation, taxes. I want to talk about how I was able to improve my financial literacy the most by focusing and learning on how to do and file my own taxes. Now, you might be thinking to yourself, well, that's really weird and odd, but I promise you, if you watch the video, you'll understand what I mean by that. So in the video today, I'm going to talk about three things. The first, I'm going to talk about the differences between passive and active income. The second, I'm going to talk about the differences between personal and business tax deductions. And then the third thing, I'm going to talk about the different tax forms that everyone should know and really highlight the things that you should be, your average person should understand. It's all of those things that you should have learned in school, but you didn't. If you're new to the channel, once again, my name is Jake. My wife and I, we live down here in Austin, Texas. I'm 36 years old. I'm not an accountant. I don't have an accounting degree. I'm not a CPA. I'm just a normal dude. I have, a business background. I work in tech. I don't work in the finance space by trade, right? My wife and I, we're both very frugal people, and we're both looking to reach financial independence and retire early and kind of get out of that rat race, right? We've worked in our careers for a long time. We're looking to lean more on our passive income versus our active income in the future so that we can gain more time in our lives. And, this week I had a really interesting conversation. So at work, it's the first week back from the, in the new year. And we were kind of, as a team, we were talking on Zoom and talking about, okay, hey, what are your New Year's resolutions? Personal and professional. And it was really interesting. A lot of people were talking about their personal goals. They want to get into shape. They want to eat healthier, exercise more. And there was this one girl that said, yeah, she wants to start investing. And she wants to learn more about investing. And obviously, and at work, nobody knows that I have a YouTube channel. I don't tell people that I have a YouTube channel. And my eyes just were, I got wide-eyed. I was like, oh, okay, somebody that's interested in finance. And I was like, oh, I should talk to her. And so after the meeting, I Slacked her and I messaged her and I said, hey, I just went down this I've gone down this rabbit hole of investing and stuff. I was just curious, what are you currently doing to start investing? And, she talked about different things that she was doing. And she asked me, hey, do you have any advice for me? And I said, well, the first thing you probably want to do is focus on your financial literacy. That's the first thing that you should probably do before you go and throw all your money into a brokerage account or an NFT or whatever it is, right? And so I recommended two things to her. The first thing that I recommended to her was to read the book, The Simple Path to Wealth by J.L. Collins. I've talked about this in the past on the channel, but this is the first thing that I recommended her to do, was learn about this. The second thing that I told her to do was, I said, hey, this sounds really boring, but I would highly recommend you learn about taxes and you file your own taxes. And because I asked her, I said, do you file your own taxes? She said, no, we have an accountant that does that for us. And so I said, okay, those are the two things that I'd recommend you do. Read this book and learn how to file your own taxes. Now, this is a really difficult topic because a lot of people get intimidated when they hear the word taxes. It's not an exciting topic. It's a little bit intimidating because you always have like that big brother, kind of thing over you where like, okay, if you do your taxes, you're going to get audited and you can get in trouble, right? Like we kind of get brainwashed from an early age. You're going to get audited and you're going to get in trouble, or you could make a mistake, or you're going to miss out, right? And when I realized, in my 20s, when I was always using an accountant and overpaying for something that I could have done myself, and the big reason why I put off doing my own taxes was because I was afraid. I was afraid that I was going to make a mistake and that I was going to get in trouble by the IRS, and that it could look a little like this. Oh my gosh. Oh man. All right, cool. So let's first talk about passive versus active income. So first off, capital gains rates, if you've ever heard of this before, passive income is something that you're not actively working towards, right? Think about a dividend stock, a dividend that when you invest into a company like Coca-Cola, you get a quarterly dividend. That is a dividend that is paid to you and you get favorable tax rates from the government. Okay, so that's the first thing that I want you to understand is the difference between passive income and active income. With passive income, you get more favorable tax treatment from the government. This is all, by design. And when comparing that to your active income, so when you go clock in at your day job, right, you are, you're earning your earned income that you get is taxed different than passive income. So when you're exchanging time for money, that is what is called, active income. And the tax brackets for active income are less favorable. Isn't that crazy? It's just so, it's just kind of how the whole system, right? The government, they want you to, they're little peons. They want us to work and, whatever. It is what it is. But it's important that you understand that there's the taxes, that your income is treated differently. Passive income and active income are not treated the same. Passive income is actually treated much more favorably. Okay, so really, really important to understand. So when you're going down this whole rabbit hole of, kind of learning about finance and investing, understand that passive income is treated much more favorably than active income. The next thing here is business income versus personal income. Now, personal income is, what you get from your W-2. So say, for example, you're a software engineer or you work in a factory, you get paid a paycheck every 2 weeks. That's active income. That's your personal income. Okay. There's a lot fewer deductions that you can claim to write off on your taxes. Okay. So I'm going to try to explain this the best that I can, but the important thing that you understand is with your active income, with your day job, you can't, there's not as many write-offs to benefit you. Okay. When you get your W-2, when you get your pay slip, there's only so many things that you can write off to reduce your taxable income. Okay. So for example, I'm just going to speed through these. There are a few things that you can do to lower your taxable income if you itemize your taxes. So, if you're here in the US, you have what's available to you. You have what's called the standard deduction that everyone gets. Everyone gets a set amount. Or you can itemize your deductions. And when you have, personal income or your active income, there's fewer things that you can lean on to reduce your income. So you can, for example, use your property tax, your mortgage interest, your, charitable contributions, medical expenses. Let's see here, retirement credits. Like, for example, if you invest into an IRA, your student loan interest, and so forth. So there's really not a lot of things that you can do. So say, for example, you're a software engineer, you can't really do much to reduce your income. Now, on the flip side, if you own a small business, whether it be, a brick and mortar store or an online business or, a lawn mowing business, whatever, right? You can offset your income much easier. Okay, and I'll give you a few examples, and I'm not going to go into every single one of these, but I just want to highlight that the government views business income, much more favorably because you have a lot more things that you can write off. Okay, so for example, you can write off your utility costs, your insurance costs, your rent costs. You can write off your car expenses, right? If you have to drive to for your work. You can depreciate your equipment. Now, this is really, really nerdy stuff, but if you buy, for example, a vending machine and you have a vending machine business, that machine, that equipment is going to depreciate. And so you can amortize the depreciation over years and you can lower your taxes that way. Isn't that cool? Also with like office supplies, let's say, for example, you have a home office, you can write off your computer, your chair, your monitor, all those different things. If you have anything that you need to run your business, you can write off as a business expense. Okay, there's a lot more that you can do with, tax deductions for a small business than you can with just a W-2 job like working as a software engineer. So the key takeaway here is if you just work, at your day job, you're going to have fewer things that you can write off to decrease the amount of taxes that you're paying. Whereas if you own your own business, you can write off a lot of those expenses to decrease the amount of taxes that you're going to be paying at the end of the year. All right, for the remainder of the video, I want to talk about the different tax forms and really get, kind of into the nitty gritty when it comes to filing your taxes, some things that you should be aware of, or at least a starting point for you so that you can do further research. Like I mentioned earlier in the video, I'm not going to be able to cover everything. I just want to make sure that you understand the basics. So when you go and you file your taxes, let's say, for example, you just got your first job, you're going to fill out a 1040 form with the IRS. Okay, you can do this, with free websites like, TurboTax, HR Block, whatever it is. You're going to fill out your information and you're going to have all of your taxable, income on your 1040. Okay, and you're going to have different things like your W-2. Like this is, for example, if you work, at a grocery store, you're going to put in your income from here. But also, if you have, your dividend income, you're going to enter this into the 1040 form as well. So when you use these different websites like H&R Block or TurboTax, or even just internationally, when I was living in Germany, you just Google in your native language, online tax forms or fill out your taxes online. There's different services, different websites that you can use. But just speaking here in the US, if you just use TurboTax, they're going to walk you through each step based off of, your information that you provide. And so let me give you an example here really quick. So let's say, for example, you have your qualified and your ordinary dividend income. If you use a brokerage account like M1 Finance or Fidelity, you're going to get your 1099 form at the end of the year, and you're going to be able to upload that directly into TurboTax. Let me just give you an example. This is my 1099 form from M1 Finance from 2021. I'm going to blur out, obviously, all my personal information, but you can see that I got the total ordinary income and the total qualified dividend income that I got here from M1 Finance. These numbers just get submitted into TurboTax when I upload this form. It's really, really just seamless and easy. I don't have to do anything. I can just upload it. But that's where you're pulling this information. And each year you're going to get a summary from your brokerage of what was qualified and what was non-qualified. And then you just put it on your 1040 form, and there you go. That's pretty straightforward. The next form that you should really be aware of is your Schedule 1 form. This is your additional income. This can be from your business, if you have a rental property, other sources of income. It's going to be consolidated and shown here on your Schedule 1 form. This form, I'm not going to go into too much detail. It just kind of shows all of the additional income that you got outside of for example, your W-2 income or your investment income. This form right here, your Schedule D form, is your capital gains and losses. So for example, if you have a brokerage account and you invest into stocks and you have a capital gain, let's say, for example, you buy Microsoft stock at $100 and you sold it at $200, you would have a gain and it would show in this in your Schedule D form. Okay, and the cool thing about when you're uploading your documents from your brokerage account is so easy, right? You upload the form, the 1099 form, and it gets consolidated into this form in TurboTax. You don't really have to do anything. You might have to confirm that the dates and the trades were done correctly, but once you've uploaded it, it's simple, it's straightforward. It shows what was the cost basis of your total investments and what was the proceeds or what was the gain or loss. And also very important, it has it consolidated based off of short-term and long-term because these are taxed differently, right? So short-term capital gains are taxed as less favorably, whereas long-term capital gains are taxed much favorably. Okay, very, very important. And the difference there is you have to hold the security, the investment, for at least 1 year. If you sell it before a year, then it's considered a short-term capital gain or loss. If you hold it for longer than a year, it's a long-term capital gain or loss. The next thing here that I want to go through is, this is not going to apply to everybody, but this is your Schedule C. Your Schedule C is from your business, okay? Let's say, for example, you have a YouTube channel or you have a Twitch channel and you generate income, or let's say, for example, you have a lawn mowing business or whatever it is, and you generate income. You have income and you have expenses. This is where you're going to fill out all of your business income and expenses on your Schedule C form. Okay, so I'll give you an example. For me, I have a YouTube channel. My YouTube channel is considered a business because I generate income. I get ad revenue from YouTube. But I also have expenses, right? I have utility costs. I have internet costs. I have property taxes. A portion of my home is dedicated to making these YouTube videos. And so I get to write off some of those expenses that I have for my home that go against my YouTube income, okay? Also, for example, I have a chair, I have a mic, I have a keyboard that I use to make these videos. I get to write off all of those expenses. Now, obviously, assuming that they're used for, for the business. Now, there's some things that you'll want to do additional research, right? Like if I wanted to, use my computer for other things outside of, outside of my business, right? I could do that, but only up to a certain percentage. Now, I hope that sparks curiosity into you. I'm not going to go into it in this video, but I hope that sparks curiosity for you to go do additional research to learn more about that. Okay. So just a few examples. So that's where you're going to see your business profit or losses here on your Schedule C. The next thing here is your Schedule E. Now your Schedule E, for example, is if you have a rental property. So I just recently, started becoming a landlord and investing into real estate here in 2019. Before that, I never did this. I had no idea how this was working. And, it was a little bit intimidating. There was a little bit of a learning curve, but after I started doing it, it was like, okay, this is actually pretty straightforward. But on your Schedule E, if you have a rental property, you buy a rental property, you're going to have expenses. You're going to have rents. That's your income is your rents. And you're going to have expenses. For example, your cleaning expenses, your repairs, your supplies, your taxes, your insurance. All of those things are going to be on your Schedule E. Let me show you a real example from my own personal taxes. I'm obviously going to block out all my personal information, but from 2020, when I was filing my taxes, I had rental income from a rental property that I owned. So let me show you this really quick. So in 2020, I had a total of $27,420 in rental income. Divided that by 12, my monthly rental income was $2,285. Okay, so this is on a monthly basis, this was the total income that I got, but I didn't pay taxes at all on the rental income in 2020 because I offset it because I had so many expenses. Now, this is where it gets really interesting, is understanding the business expenses that I can write off, or the deductions. Let me walk you through really quick a couple examples. So, for example, I had almost $2,000 in cleaning and maintenance expenses. I had over $1,000 in insurance expenses. I spent over $8,500 in mortgage interest. I had over $1,200 in repairs. I spent over $13,000 in taxes. Property taxes in Texas are insane. But this is the key. This is the kicker here. I got almost $10,000 in depreciation. Okay, I'm able to amortize the depreciation over years, and I'm able to reduce my taxable income with depreciation. Now, really quick spoiler, this is not free money, because when you sell the property, there's something that's called depreciation recapture. You can do your own research. This is not free money. I will have to pay that back when I sell the property. And if I sell it at a gain, I will have to pay this back. Okay, or a percentage based off of, there's going to be a recapture. So it's, once again, hopefully this sparks curiosity in you to go and do further research. But here, this is the important thing. With the depreciation, with all the expenses, on paper, I had a total expense of $37,000, which actually resulted in a loss of almost $10,000. But in reality, I was actually cash flow positive. Every single month, I was cash flow positive. I made more money than I quote unquote lost, but on paper, I showed a loss. And that's the interesting thing that a lot of people don't understand. With your active income from your W-2, you don't have all of these opportunities to, take advantage legally of these tax deductions. Okay. This is why a lot of people don't like billionaires, because they don't pay any taxes. They're like, oh, it's unfair. The tax system is unfair, which, I guess you kind of is in some cases. But these are the tax laws that we have today. And billionaires take advantage of this because they don't have, active income. They don't have W-2 income. And do you remember what I was talking about earlier? How active income and passive income is taxed differently, the deductions for personal income versus business income. A rental property by the government is viewed as a business. This is a business, okay? And I get to treat it as a business, and the tax code, the tax laws benefit me as a business owner, okay? Very, very different than your W-2 income. The real purpose of this video, hopefully, was to excite you and spark your interest to educate yourself and to help you learn more about how the tax system works and to help empower you to take the next steps to take control of your financial future, right? And, to help grow your financial literacy. So once again, I was able to do that through improving my financial literacy through, learning more about taxes and filing my own taxes. I would recommend, I have one on my screen here. This is from TurboTax here. These are the different options that you have available to you. Now, I want to stay very, very clear. I'm not sponsored by TurboTax. I have no affiliation with them. I personally use their software and I get value out of it. And whether you use them or whatever, I don't care. But the important thing is if you're doing this for the very first time, and I'm making this video for those of you that have maybe never filed your taxes before, it can be very intimidating. Okay, so if you're thinking about filing your own taxes or at least exploring it, there's different options that you have available to you. What I would always recommend, if you just have a day job and you're just, a W-2 employee, I would always recommend try the free version. Now, if you have a little bit more of a complex tax, situation where you have different deductions, you can look at different products that they have. If you own investments or a rental property, highly recommend using a different product than the free version. And if you have your own business, definitely recommend using a different product than the free version because it'll walk you through all the different deductions. And even if you don't file your own taxes, what I would encourage you to do is at least start it for free and learn how to do it. Learn about how how the tax deductions work for your active income. Learn about how it could work if you have your own side hustle or your own business. And the last thing here, if you wanted to go and do, kind of a tax calculator or kind of, play around with it yourself, you want to educate yourself and at least learn about it, there's tax simulations here on TurboTax that you can use and you can play around with it. I will leave a link, and it's not an affiliate link, I promise. I will leave a link to this. If you want to play around with it, go ahead and play with it. It's kind of cool. It's not going to give you everything, but the big thing is with taxes, I found this with myself, is that it's getting over that hump of actually doing it. For me, it was really that fear of the unknown. Once you start doing it yourself and you start learning about it, you'll realize, oh, wow, this is actually not as hard as I thought. It's not intimidating as I thought. And it changes, like when you think about it, that learning curve, once you've done it and once you get experience in doing it, it changes your outlook entirely on how you view money, how you view active versus passive income. And it just, at the end of the day, if nothing else, it makes you smarter, right? And it makes you more knowledgeable. And not to sound too cliche, knowledge is power. Thank you so much for watching, everybody. I know that this topic is not the most exciting. This is not a topic that I can talk about with my wife. My wife doesn't like talking about taxes. And, I thought to myself, well, hey, maybe there's some other, nerds out there on the internet that love talking about taxes, that love learning about it and, thinking about how they can, save every penny. And, it's just kind of a different topic. And so I appreciate you watching the video. It's something that's been on my mind a lot. It's not always about how much you make, but how much you save in the end, right? And there's a lot of things that you can do to optimize your taxes. And, hopefully this video sparked a little bit of curiosity and interest in the topic for you. But yeah, thanks for watching. I'll catch you all in next week's video.
Please subscribe, please subscribe. Please subscribe.
You know what? I think we're gonna be friends. Can everyone say hi to my friend? That's crazy. I just wanted to say thanks. I'm glad you came along, partner.